Good morning, everyone. Happy Tuesday. And I'm Microstocker D. This is the Euro Trade. On TopstepTV, we have some metals breaking out. We have silver breaking above the Asia high. Now we have copper. It's looking quite interesting. On the weekly time frame, it closed above the previous two weekly closes. Testing that area now. And it's also tagging ADR low, also where Asia low was. So that could be a pretty decent setup. When it comes to silver, I want to see a test of the Asia high. And then we actually have some setups this early morning. But we do need a bit of a pullback because silver ran away to the upside. So we don't want to be getting involved when a very, very big candle has already been printed, because you want to minimize your risk as much as possible. But copper, on the other hand, might be okay on a 40-tick stop. So let's try that. We're tagging VWAP here as well. Needs to show strength. And the reason why I'm trying this first over this one is because I want to see a retest. And the Asia low reversal is actually looking a little bit more sane. Alright, so if we're meeting for the first time, I've been trading for almost 19 years now. 13 years out of that, I've been trading for various prop firms as a commodities trader, not equities. So this is why you will see me trade precious metals, base metals, energy markets. I woke up with a bit of a sore throat, so never mind the frogs in my throat. And like a true rock and roll former star, I'm drinking peppermint tea, which is awesome. Alright, let's see if the silver can actually wick downwards. For now, silver and gold are correlating the most. Copper at the moment has a bit of a mind of its own, but this trade is with the higher time frames because of that close above the weekly high, a test of the previous weekly high or previous 2 weeks high. So I'm basically looking for the larger time frames to take over and to start taking us through this massive smash that we had back in July. Because this is a weak structure. You know, it may have taken quite a long time to go through it, but right now we're breaking outside of this little consolidation or reaccumulation range, and therefore that one is definitely going with the higher time frames. Silver longs, if we look at the weekly time frame, I mean, you can say that this is also going with the higher time frames, but it's a little bit more risky, right? Because we didn't retest anything from the previous high, previous reaccumulation area. So this would be more of a breakout type setup. But again, I don't like doing breakouts just like that. I like to confirm a breakout, then trade it on a pullback. So that's what we're going to be looking for. But yeah, it's very similar. I think I left the door open, so my watchdog 7 has decided to venture out there and bark at the Amazon man. All right, let's get some time and sales in here for copper. Don't know why I lost the dome here, but let's get it back. Now, copper is a very quiet tape usually, so I don't really need to filter it out. And I do expect some reaction at VWAP before we go higher, obviously because it's a pain point. But we're still sitting outside of the initial balance, so let's maybe make some markers for that as well. Let's use the horizontal ray for this purpose. So that's IB high. And then IB low. When it comes to the profile, we're sitting below both the London and the COMEX values and the LME, because copper is a metal that is widely traded on the LME. So it's something that you may want to consider. So when the LME begins, which is 1140, you may want to anchor a VWAP there. And actually, I'm going to do that now. So it was in this candle, so it's not going to be super accurate, but so let's just do this. So roughly LME VWAP from yesterday is sitting all the way up above this put wall that we have from end of day trading. Now, obviously, if we return into the initial balance high, that will be in invalidation of the setup, and I need to bail early. So let's see what they're going to do. Silver is trying to continue higher, but again, the structure is looking a little bit dangerous at the moment. We need a test of Asia high, then a reversal, then a continuation. Otherwise, we're too close to the ADR high for me to get involved, whereas copper has already busted through the ADR low and reversed, so now that means I have space for it to rotate up to the other side, which is around 542.30. So let me see if I have a marker. I do not, so let's do that. 40, what did I say? 42.30. There we go. Do I trade gold? Sometimes, yeah. I have traded gold quite extensively for like 12 years. I don't like gold at the moment because I think it's still a little crazy with the range. So if I look at my sort of base strategy, I like to use the stops that are within about 40 to 60 ticks max, unless we have some, you know, extraordinary circumstances, which I don't think we do now. But with gold being up at like nearly 600 ticks per daily movement, I think that the stop loss of 40 ticks would be too small, because you're using less than a tenth of the overall range, and that means you are sure to get stopped out like in a flash. So you need to use stops that are conducive to the range and the volatility of the product that you're trading. So, you know, if you're using tiny little stops, like for example, back in the day, ES was only moving about 20 ticks per day, 16 to 20 ticks, that was it, 4 to 5 points. And using, 2 points, that was okay. So you could survive quite a long time. But now you have ES moving more like, 300 ticks per day. So therefore, using something like 40 to 50 ticks would be more appropriate. So you have to scale your stops. Now I look for bigger trades that have legs to survive for the next sort of at least 90 minutes, maybe 2-3 hours. And that means nitpicking on stops. The only thing that's going to do is get me out of a trade too early and not give the trade enough time to work out and develop. So you have to stay patient, right? If you want more out of the trend, you have to give it time, if that makes sense. So yeah, I do look at gold, but at the moment it's kind of off my list because a lot of the times it is very range bound as well with a lot of wicks. So if we have a look at yesterday, it kind of did the same thing as silver. I actually did have a small silver trade yesterday, but it didn't really go far. I was aiming to get about 600 out of it. I barely got like 200. So that's that was a bit boring. And what was it? It was a value low reversal. So we opened slightly below value, went to test the edge, turned around, so I popped in a short, and it just, didn't really have much legs, so it ended up being a quieter day. And gold kind of did a similar thing, but look at this. Like if I look at this wick, this is too big for me. So let's take measuring tools. There we go. So the wick, the wick was 180 ticks wide on a 30-minute time frame. That's insane. Just the wick, like the entire candle was over 200, 227. So, I can't really trade without using very large stops when a 30-minute time frame is doing that. Because the way I design my stops is that I have to have enough of it to be able to absorb at the very least one 30-minute time frame. So immediately, even if I look at it from that perspective, my stop on gold would have to be 227 ticks. It's a lot. That puts me down to like, what, 1 micro? Like, I'm doing the XFA. I don't want to trade a micro. That's, it's meh. So yeah, it's on the back burner for now, for me. Purely because it's too crazy volatility-wise. So yeah. Bolinvas Peters Olivier says, "Hi Deeyana, I follow you sometimes in the morning, and I must say you're really pertinent on your setups and psychology explanations. That's great, good job, congrats." Well, thank you. It's very, very nice to hear, very nice to read. I'm not somebody who trades a lot, but if there is a setup, I will trade it. If there's none, then I chat. So, what is ADR? ADR stands for Average Daily Range, and it is a quantitative extreme. The expected range that particular product is going to do in a day. So therefore, if you're trading without knowing where your ADRs are, I would say that you don't have enough data about the product that you're trading, because you might find that sometimes going long into the ADR, yeah, that might work if it's an outlier day, but most of the times if you smack right into the ADR, it will reverse on you, and then you're like, oh, it's a breakout. Oops, it's not. So, it's just one of those things that make me understand where I am in the ADR. How much do we traverse? Are we going with it? Are we going against it? Do we traverse 50% of it? Or are we just starting to reverse from it? So that shapes the playbook that I'm going to do. Am I from Russia? No, I am not. Why would you think I'm from Russia? I'm from Serbia, which is nowhere near Russia. And while it's a Slavic language, it doesn't really have much in common with Russia. It sounds like it does, doesn't it? Like Serbia, Russia. But I'm a naturalized British citizen, and I have lived in the UK for, I don't know, 25 years probably. So we're getting to a point where I've lived in the UK longer than I have in my own country. So, and I also grew up with English because my sister was born in London. My parents used to live in London. And then my auntie came to visit my parents and stayed in London until like a few years ago. So she's been here for like, I don't know, 50, 60 years. So I've always had a connection to London, let's put it that way. And then when I was 20, I decided I was tired of the nonsense that we were having in former Yugoslavia, and I just wanted to live my life without the fear of another war looming over my head. So I decided to come to London, and that's it. Been here ever since. What is the difference between ATR and ADR? So ATR is average true range. The main difference between the two is that ATR counts gaps, any kind of weekend gaps. If you have a weekend gap and it opens up higher, or let's say you're trading cattle or something that actually closes overnight, if you open with a gap, the ATR is actually going to take in the gap as if it's a range exhaustion, whereas ADR will not. It will start the calculation exactly where you tell it to. So that's the first difference. Now the second difference is that ADR is mostly done to figure out the entire day's range, whereas ATR can sometimes be done on a period, so time frame. Let's say you drop down to 5 minutes and you will get an average of, let's say, the last 10 to 14 periods, whatever you said. And that can be a decent measure for the volatility of the product, but I dislike it because I trade through multiple sessions. So if I want to carry over, let's say, a copper LME trade over to COMEX, I feel like I'm always using the 9 or 10 candles from almost like the out of hours state, which is London Open. That's an out of hours time for copper and for silver as well. But I always find that if I'm basing my stops on that, I'm basing my stops on a lower volatility environment. So what I've done in my pro development program that I teach to many others, I've actually created my own version of it. So it's called ASR, average session range, which is kind of like an ADR, but it takes just the regular trading hours for multiple days looking back. And then it tells you what that number was. So I like to divide that by a certain number, and that's how I get my stops. So that's my way of doing it. But we have Coach Paul, who drops down to a 5-minute chart and then takes the 2 times ATR, and he uses that for stops. And, you'll probably come across the, different ways of doing that. And the numbers are probably going to be fairly similar. It's just that the way I do it matches what I'm trying to achieve, rather than, basing the London stops on, the Asia range, or basing, COMEX stops on the London range. To me, that's suboptimal. So I've figured out a way to do something different that will give me the appropriate size of the stops, and it's fairly systematic. I don't really step away from that. So part of my weekly plan, whenever I sit down on Mondays, or sometimes even on Sundays, I effectively look at the ADR and ASR, and then I used to write it down. Now it's like a part of my DNA almost. So I'm like, oh, okay, that's the, let's say, 340 is the average range, average session range. What does that mean for my stops? Okay, 55 tick stop, So now I know very quickly. But before it was like, what would that be? I need to calculate it. The Cool Dog says, I know you said mostly trade metals and commodities, yeah, and DAX, but we don't have DAX, so, can I do a quick outlook for NQ? I can. I don't really like it. but I am on the XFA right now, trying to get into the new dashboard. So I do have NQ. Now, every time I look at a product that I haven't looked at for a while, I like to start with a monthly chart. So what do we have? Well, we had an attempt previous month at a sell-off, which was pretty much invalidated with a buying wick. So right now, we're seeing some kind of a distribution. Whether it turns into a reaccumulation or not, this GEX2 has been there forever. God knows when I put that. But we are at the top of the range with a probability of some sort of a distribution behavior on the monthly. On the weekly time frame, kind of a similar outlook. We're tagging the newly formed supply, which is not a super high quality supply, but there's definitely some sort of a reaction already going on. So I will be looking at whether this week is going to be reactive or whether we start moving away from this level. If we start moving away from this edge, I call it the conterminous line, which is like a market shift point where you tag a supply and then the nearest edge of that supply where you had the drop and the change of sentiment effectively, where that gets tagged, if it gets a reaction just purely on the price patterns and it ends up away from it, that means we've rejected it. Okay, but if it goes into it, it means we're not respecting it, and there's a possibility for further upside move, which may be slowed down by the fact that we've had some areas of supply there, and some people who are obviously interested in selling this. Now, whether 26,000 is it for the year, I don't know. We'll see. But this month, traditionally, before Christmas, we have a bit of an unwinding move as a take profit before the institutions start paying out bonuses and all of that. So I wouldn't be necessarily looking for too many longs in the run-up to Christmas. Maybe right after Christmas, we can have that Christmas rally, which is not actually into Christmas, but right after, like the 3 days after. So, yeah. Yeah, so on the daily chart, similarly, we are distributing. Look at this congestion that we're starting to get. Can you see that? So this is not a clean arrival by any means. So we've had another kind of doji that'll pop up and then a reversal. So we need to battle this first. But yeah, it's all looking a little bit quieter. And this is not going to be smooth price action, I don't think. It's going to be tricky at best. And, you know, NQ is just like, I don't know why people are so obsessed with it. It's such a nonsense product. It's too dramatic, it's too fast, it's, it doesn't really bring smooth movement either. Like, look at this. Like, even if you got a really good entry, let's say you're a long from somewhere down here, and it wicks below the low, goes into weird hammer candle, then carries on, and yes, it carries on, but look at the wicks. It's just, so disgusting to me. I can literally just get this unease every time I look at NQ price action. And even on a 30-minute chart, like yesterday we had a down move, look at the wicks. Like, how can you guys trade this? I want it smooth, and here it's like, it looks like it went down smoothly, but look at the amount of overlap between the candles. Like, how many candles are making new sort of price discovery to the downside? This one doesn't do it until it's down here. This one, again, almost completely overlaps and makes no further movement, barely makes a lower low. Then we have a lower low, but then a doji. It's like, if you're in this and you're trying, like, I can see why people can't hold trades on NQ, because even for me, that would be like, I can't hold that. So yeah, and if you want to know what the value areas are on NQ, so right now we're sitting sort of in the top third of it. You can kind of see it on this profile as well. Let me just move it to the... So top third of the profile. If the market opens up above it, maybe there's something to be said for a value high continuation or something, but if it opens inside it, I would wait. I know that sometimes initial balance looks like that's it, but really I would be waiting for the initial balance to be over, purely because if we open inside value, that's immediately statistically very likely to end up as a range day. So yeah, so we'll see. And obviously at this time of day, ADRs are going to be fairly intact on NQ because we haven't really had an outlier move or anything. But yeah, let's get back to silver micro here. Ooh, we're tagging the high. Okay, let's just watch what happens here. I mean, they might go down and tag VWAP as well, so. But usually when there's a breakout, they tend to tag Asia and then carry on higher. How does my ASR compare to median range values? Well, it's going to be a little different, right? So if you have, for example, let's use copper maybe. So you have the average daily range of 207 ticks, but the regular trading session for that is only 150. And that's a completely different measure, right? So ADR is probably going to be slightly bigger. But it depends on what session we're talking about. Like, for example, sometimes Asia massively overshoots both COMEX and London on metals in particular, because Shanghai exchange is pretty big. Moonkey says, what's the easiest way to figure out London highs and lows? Asia highs and lows. I know it's a stupid question. It's not a stupid question. You're from Australia, so the time zone is a bit confusing. Okay, so first thing to do is go for the time zone converter. So that's step one. Now, I do this all the time because obviously most of the team is in Chicago and I'm in the UK. So I have Chicago and London here. But wherever you are in Australia, you want to pop in your times. And then you need to know the times that the sessions are trading in your local time zone. Because I assume that on TopstepX you have your local time zone. So if I know that Tokyo in my time zone is from midnight till 6 a.m. London time, I will look to see what highs and lows were created between midnight and 6 a.m. So this is the Asia high, this is the Asia low. So that is the easiest way to figure out the highs and lows. So whatever the highs and lows are done within that time frame, that's where you're looking for them. So it's not a stupid question, it's actually a very good question. And yeah, so that's how I like to mark them. All right, so we're getting a bit of a reaction here. Let's do this. Let's try it. Let's do a bit of risk partialing between silver and HG and see whether we can get some traction here. Now, I do have silver up on that screen. So we're just going to see whether tagging Asia high can bring us the continuation. But if you look at, you know how yesterday I was talking about my conditions, that if we have a breakout above the Asia high, I don't want to see a volume bar that spikes 3 times the volume of the surrounding bars. So look at what happened here. See? So that, more often than not, tends to bring continuations. So this is why I'm not keen to sell this against it, but I was looking for a pullback to Asia high. So now we just want to see whether somebody else is also looking at a continuation from this level, because we can't just trade by ourselves. Do I still trade ES sometimes? Yeah, sometimes. If I maybe started late, or I haven't traded much during London, typically I will maybe do it on Fridays, because Fridays I don't have the stream in the morning, so I can actually have some of my mental capital left for the New York session. And I will look at ES. Typically I like to trade it towards the end of the day, or into the Euro close. It kind of depends. Not every day, I would say I kind of trade it a few times a month. So yeah. Can I advise when to add into a winning position? I can't advise you anything. I can suggest, but no advice here. Read the risk disclaimer. So I'm a proponent of building a position in a zone rather than adding to a position when it's already well into profit. And that's because I'm a nerd, and that's because I was never comfortable looking at the average for the position just being completely out of whack because you added to it. Now, back in the day when I was starting in prop, adding to a position would mean you're in with 10 lots and you're adding 1. But now we have people who start with 1 and then they add 1. So what does that do to your average, is what I'm going to ask you. Let's get some critical thinking going here. It will mess up the average completely, because now that's not the same trade anymore, right? Now it's a nonsense entry that probably doesn't make much sense to anyone, let alone the structure that we have. So from that perspective, the way I add is to have a maximum default size in mind. Now, for example, right now on this XFA, I have a maximum 3 lot position size. 3 lots, that's it. How I choose to use those 3 lots is up to me. So right now I'm choosing to partial them between a base metal and a precious metal that both have a slightly different setup but the same sort of directional outlook up, okay? Now, if I was just to, let's say, trade silver and not do this one, I would have entered this first position here, but then if we get a nice little move away from the Asia high, however not too far out, I would then maybe pop in another one after I get a strong 5-minute engagement of the institutions and they go, yep, this is now reversal. That would be it. I would not add a third one, because at that point we're so far away from Asia high, which is a reference point, that to me that wouldn't make much sense. Now, let's say that we dip into Asia high. So I have one position here, then we dip into Asia high, but then also reject. So now the second rejection pattern is sitting below the first entry, but still above the Asia high. That would be an add-on for me. Is it a winning position? Not yet, but what you're doing there is adding in a zone. So I personally am actually against entering positions. This is where I disagree with Tom Hugard, and because if you look at an interview that he did with a guy called Andrea, who's also on YouTube, he actually said that adding into a position blew up in his face last February, April, so not this one, but the last year. And I'm not surprised, because that's what happens when you're effectively martingaling in. And when you have movement that has follow through, that's a beautiful way to make money. But unfortunately, last February, we ran into a time of the year when the follow through, especially for the times of day when he was trading in the morning, was just not happening. So he was still doing the adding like a madman. And unfortunately, it didn't work for him. So he blew up a whole bunch of cash. He'll be fine, I'm sure. But he did say that he's kind of reconsidering that side of the story, because in order for you to keep adding to a winning position, you either need to be in an outlier day, so something that just keeps going, which again statistically only happens 8 to 10% of the time. The true trending days, where it just goes in one direction, doesn't turn around, has no ebb and flow, just keeps going. That's an 8% outlier position. Did we have tariffs that put a dent in those statistics? Absolutely. Well, we had mad momentum. Was that the appropriate way to approach tariffs? Just adding and adding? Yeah, quite possibly, because it just kept going, right? But again, when we have normal markets that I've experienced without COVID, without tariffs, without black swan events, you need to be very careful with adding to a position. A better way is to have a maximum default position, work your position into that. If you have like max 3 micros, work that around the level, and then just play that. Like, have the best average entry that you could possibly have in the situation, and always have a maximum default stop in mind, so that if your average ad goes over that stop loss size, then you're skewing the entry, then you're messing up everything. Okay, so you need to have the average that is working. Let's say I'm using a maximum default stop of absolute maximum 60 ticks, right? So if my first add-on makes my stop loss 55 ticks, and then it keeps moving, my third add-on is going to take me over that. So that is immediately a no-go, yeah? Something to think about. The average and your stop loss size that you've assigned for yourself as a maximum, absolute maximum. For me, absolute maximum is average session range divided by 4. So if any of my positions have to go over that, it A, means that I don't have a positive risk reward now on that, on anything that could happen, really, statistically. And 2, it means that I'm probably not trading the setup the way I should be. So you have to reevaluate. But just adding like a lunatic, to me, that's a very retail thing to do. It's like, let's add more. Okay. Let me know how it works. No, I'm not going to trade FOMC. I have not traded FOMC for years. And my products don't really move for FOMC, to be honest. They're just not. Like gold does, obviously. But silver, copper is like, nah. Sometimes it moves a little bit. And then you get a little bit more oomph, but no, I will not be trading the FOMC, sadly. I'm going to watch it. Yeah. Because obviously I want to see what he's going to say, just generally, but I'm not going to. I'm not going to get involved in that. All right, let's see what they do here. So if it kind of jumps... Again, this is the situation that I was talking about. So it dips into the Asia high, but still reverses. So that would be an add-on. So maybe just for educational purposes, I can maybe add another one. Didn't really plan on it, but maybe. We'll see. If it pulls back over my position, then that shouldn't be it. Do we still have a scaling plan? I forgot how the XFAs work. I've been in the live for so long. If it's a scaling plan, then it won't allow me to add a third one, because I've literally just started this like a week ago, and I've got like barely three trading days, and I'm still just break even, because I haven't really seen too much opportunity. Silver and even gold and copper have been a little bit quiet, so I'm just waiting for the time to start getting a little bit of a buffer on this. And I haven't looked at natural gas. I mean, I've been tracking it, but it's just not exhibiting the seasonal longs that it normally does. So I've stayed away from it because I'm not sure what they're trying to do with it. Usually for natural gas, they do go into a mad upside move. And they attempted that, but now this week is starting off very down. So this week I'm chilling on natural gas. There might be a long there at some point, I don't know, but right now this is not looking that great for a seasonal long position. So yeah, nothing much to do now. Just I've got 19 minutes before the next TPO finishes, so I just have to sit and wait. Silver is leaving a small single print to the upside. Copper is having a quieter move up, so I need to allow for that. But for now, again, it's still above the initial balance. And it's still, this should be a little bit lower, because I'm not re-tagging the high here. And until that changes, there is absolutely nothing for me to do. So I need to sit back, stretch, breathe, drink my peppermint tea, and yeah, just wait and see what they do into the next 30-minute TPO. And then we can plan the next OODA loop, observe, orient, decide, act. And if the act part means do nothing, that's also a part of the loop. Stay in and watch. That's what we do. So invalidation for silver would be, I mean, my stop would probably get hit because it's not that big compared to the volatility that we're having. So yeah, if it goes back into Asia high and closes a 30-minute time frame back into Asia high, that would be an invalidation. And similarly on copper, we have another value, which is VWAP and IB high. So I don't really know which one of these is stronger. But if it goes back into the initial balance high in the next 17 minutes or so and closes confidently inside it, that would also be an invalidation. So again, there's nothing else for me to do. But wait, sure, we can have a retest of the Asia low on copper. If I get hit on this one, will I trade the test of Asia low? Maybe. It just depends on what time that happens. But if we're still sitting inside this whole zone for post and white cut, so that will be COMEX, 90 minutes into COMEX, and into the euro close, then I might try another long if nothing else changes. Because right now, this is a reversal from the ADR. And if it keeps going higher, it just keeps going higher. So that'll be the easy part. But for now, we're battling VWAP and initial balance high. But yeah, the FOMC story, yeah, so those of you who have been with me, you probably remember, I was trading ES with quite a bit of size, because I was working for a prop that was pushing size. And I got stuck in a position that actually went my way, so it went 140 ticks my way. I tried closing it, didn't work, tried putting in a limit order, didn't get a fill. And then it started turning around on me, and it turned around completely, didn't respect my stop, so nobody filled my stop, and it just went through it. And then it closed it like 2 minutes later when some people started coming back onto the order book, but it was too late because I was down like $250,000, which was very painful. Not career ending because the amount that I was trading then was in sort of like the 2 million side of things, so still very painful. But if I didn't have a heart attack then, I probably never will. That was a different lesson to learn. Don't trade FOMC because there may not be enough orders to fill you if you're in the live. Now, obviously, most of you are on the sim, so you don't have that issue. But if you think that, because I saw somebody saying things like, oh, those of you who are on the live, I see that you never get these problems. No, we do. We do get those problems even more than you guys do on the sim. The difference is that those of us who are on the live, we don't get the money back, right? So every time something F's up on the XFA and sim side, you guys are like, oh, how are you going to make it right? How are you going to make it? And then they effectively refund you, refill you, and they roll back the account balances they can't do that on the live unless they're going to put up more capital. So if something happens and you end up in a loss as a result of that, whether it's the CME stopping trading that happened a couple of weeks ago on a holiday day, or whether it's something to do with the platform or the actual data feed, again from the CME, or maybe just slippage. Just slippage. You couldn't get out of a position. There was not enough contracts there. You trade thinner products. That is something that you just have to take on the chin and carry on. So they're not going to refund that on the live accounts. So, you have it pretty well on the XFAs and the SIM funded side of things. But yeah, FOMC is dangerous. Like I said, maybe less so if you are on the SIM and XFA because it's all just simulated money. It's like performance-based more than actually you being in the markets and knowing how it all works. But if you're in the live account currently with Topstep, just be very careful because the order book, the dome, gets super thin. And then if you don't have anybody to take your order, you're just stuck in a position until there are orders. That's just the CME mechanics. There's nothing, there's no crying about it. That's just how the markets work. Nobody there to take your orders. You stay in them until there are. And this is why most of us who have been around the block a few times, we just don't like trading high-risk events because we've all had bad experiences, either with slippage or getting stuck in positions. It's just not worth the pain. It's just not worth the pain. So you just, wait for the dome to repopulate, and then you'll be like, okay, let's see how the market looks now. Can I explain what the initial balance is? So the initial balance is a very simple concept. It is the first hour of any exchange open, and then whatever the high and the low are made during that time, that is your initial balance high, initial balance low, and your initial balance range. Super simple. And the reason why it's important for me and a lot of other people who are into profile is that it gives you a reference of how the auction is doing, right? So it's not necessarily, oh yeah, let's get into the trade around the IB edges. Yeah, that can be one thing, but it's just another reference point. So if I show you, for example, my copper platform, right? So this is AMP Futures via MetaTrader 5, which is my charting platform. I like it. It's just logic. It really doesn't matter what platform you're using for this. I just happen to create indicators for this platform. We're working on others, but I'll probably stay on this one because I'm Granny D and I find change a little bit difficult. But yeah, so how is the auction doing? So here are the TPO letters. It's basically the same thing as the overlay that I have here. We're printing 3 TPOs. And every time I say that, I want to say C3PO, like a good old Star Wars nerd that I am. But let's stick to 3 TPOs. So CDE, if we print F as a 4th TPO row, that means that the auction is super slow. So then you can stay in. You can't stay in because it might just keep crawling up there. But you know that there's not too much initiation. It's not some crazy move that they're doing and now you can't even catch it. You can relax, but you also have to be careful that it doesn't fail the auction and start rotating downwards, right? So for now, we have a possibility for a slower auction day. That could obviously change with the other exchanges stepping in, like LME for copper and then COMEX for silver, gold, and copper. But LME is pretty important for copper because it's a base metal and it's heavily traded on the LME. So yeah, if that continues to play around the IB high, that means I'm still okay. But if it starts to fall into the initial balance, to me that will be a sign that the auction is not doing well and we are actually in danger of it failing the auction, and that's an invalidation of my trade. There's a whole bunch of other things around it as well, but you can have playbooks based on the initial balance, but you can also have playbooks that have nothing to do with the initial balance, especially if we're talking my auction fades when we're so far from the initial balance, that's not really an option. In that case, you can look at single prints that have been left behind as a possibility of profit taking, or even initiating if there's a single print trade. Like, there's so many things. I really don't have time to explain it in the short format here, because then it would just become about me explaining the initial balance setups. So yeah. How do I decide when to fade spikes caused by news and data releases versus when to join the move and treat it as the start of a new trend, given silver's higher volatility and tighter spreads compared to gold? So here's the thing, volume and the size of the volume spike. Look at this volume spike and look at the preceding volume bars. Can you see that? Let me just check my framing here. Yeah, you can see that. All right, so how much bigger is this spike? So let's just say this is all you see. So we haven't seen the aftermath. We don't know what's happened after. This is all you see. How big is this spike compared to the previous 3 volume bars? Is it 1 time bigger, 2 times, 10 times bigger? It's 10 times bigger, right? It's massive. So here's a little tip. If the volume spike through a reference point, in this case Asia high, is more than 3 times the size of the preceding bars, that's usually a breakout, true breakout, possibly start of a new trend. Should you just plow into it? No, because by the time that the bar ends on a 5-minute, we're a little bit too far out of the Asia range. So I look for a pullback and then a continuation of the trend potentially. And that can get a little bit painful, but you have to wait for it. So right now we have what Dakota would call a 3-bar reversal. I call it a morning star. I think Aaron does as well. And but yeah, it's basically dipped into Asia. It is now continuing. So I'm expecting that to continue. Why? Because the breakout had so much volume in it that we cannot ignore that. Now, if the volume bar is not that big, so let's have a look at this one. I don't know whether we had some references here, but the spike that happened downwards, you need to have a reference point. So maybe this was, I don't know, Colmex low or something. And then you see the bars that have, you know, pretty enough oomph in them, enough oomph. Enough oomph. But then you get a bar that is a spike, but not quite that big. It's barely 2, well, I'd say maybe 1.5 times bigger. That's usually an exhaustion bar. So it means there's just enough volume there to smash through the level, but then it pings back. That tends to be more conducive to the fade. So that's when you would fade it. So volume in this case is the filter of whether you're looking at just a spike and a fade or a start of a new trend. And to quote Jim Dalton, price is nothing but an advertising mechanism of volume. Such a great sentence. Love that sentence. I am not a volume trader though. I'm not. But do I use volume as a component to sift through what's what? Yes. Am I a volume trader? No. Do I make decisions solely based on volume? No. I use a combination of profile, price action patterns. So here's the thing. If the price action here spikes with, let's say, 1.7 times volume bar, but then it doesn't finish as either a hammer or anything, but it finishes with another selling wick, and we're sitting close into whatever reference point I was looking at, that would not be good for me, because I want to see initiation via a strong, some kind of a Maribozu candle with no selling wicks to the opposite side, or wicks to the opposite side, or whatever you're trying to do. Like if you're trying to run a trend trade, you don't want to see, like for example here, you do not want to see or get involved if you have a selling wick. It means it's not time yet, so you look for a pullback. But if I was going to short this, then this wick is excellent. So what do I not want to see then? I don't want to see this wick down and then pull back up into a buying wick. against my short, the fade of the spike, right? So that's how I personally differentiate between a start of a new trend and a fade. And sometimes in metals you don't have, you have neither, right? You have just steady volume and nothing's happening. At that point I'm like, nah, I don't actually want to trade this. And you will see me many days sitting here and going, I have no trade. I have no trade. So, you know, I'm not here to appease chat with a million trades. I'm here to follow my strategy and my plan and not to click buttons just because somebody on like in chat wants me to. So if I have no conditions for my setup, like maybe I can do that in a combine, right? Let's mess around with a combine. But when I'm trading live, when I'm trading XFAs, those are money on the line and you have to be, you know, extremely serious over what setups you're going to get involved. Now, as it happens today, we have some potential for very good moves, continuation moves. Is it because of FOMC? Yeah, maybe, probably. You know, maybe some new positioning ahead of the big release. But this is not an everyday thing for this time of the day, which brings me into Cedric's question. Are all metals start times the same? No. So base metals, out of which we only have copper, but there's tin and there's aluminium, or aluminum, as our American friends like to say. And I would look at the LME for that, because base metals are traded on the LME. Silver and gold used to be traded on the LME, but then that wasn't that successful, and then they shut it down in 2022. So there's a bit of a knock-on effect in silver and gold when LME starts trading, but not that much, because it's not actively traded. COMEX is the main opening time for silver and gold. So for silver precious metals, such as silver and gold and platinum, you want to make all of your decisions based on COMEX. But LME, if you're trading copper, and you know, if we had tin and aluminium, you would look at those as well. Zinc and aluminium, that's what I was trying to say. Those are base metals, right? So you would look at LME open for that, and LME close, which is 5 p.m. my time. But you know, silver, platinum, and gold, they're COMEX babies. So that's what you reference, what Hogue talks about every day. But yeah. I have another question. Could you explain why you take profit as near the ADR high and not the recent high, even though it's a scalp? This is not a scalp. This is a continuation sustained auction trade. It's not a scalp. And that means that with the sustained auction, we have enough juice and enough power that was done on the breakout, and enough interest to take this into the full range for the day. But at the same time, I'm not aiming for a call wall. I'm just aiming for just under ADR, not being a dick for a take, but just kind of going, okay, if it gets anywhere close to ADR, that's great. Because for me, this is a wick. This is just a wick on a breakout, not a sit. Because it happened all in pretty much the same 30-minute time frame, right? So we wicked all the way there, and then we reversed, retested Asia high. So I'm not a scalper. I keep saying this. So if I can take the majority of the day, or 30 to 40% of the day's move, that's what I'm going to do. And not aim for pitiful, barely, like what is this, barely 1-to-1. I want to have a positive risk reward because it makes the whole system more stable. Why would I go for a 1-to-1 when I have ADR available? And if we look at the structure, we go back, look back, where was the actual structural high? Was it here? No, it's up here, way past the ADR. So I have that in my memory because I'm a little bit of a freak. So I remember that we came close to 60 and then reversed from it. So my major swing, all of these are irrelevant. They're inside highs, inside high, inside, and now we make another inside high. Couldn't care less. Because I know that the major swing reversal point is just under the 60. I also have the information of a call wall that has been there and sat there for days, absolute days. Like it sat there for 2 weeks, I think now it's been there. Cold wall at 60, and they're still not tagging it. And yet, every day, I'm seeing the open interest building at 60. So it means they keep wanting to go there. That's the natural magnet. So until we are there, I'm going to look for setups that trade towards that level. And if on the day, ADR or something else tells me that 60 is within reach, I will extend my targets to 60. I'm not going to look for some, excuse my language, bullshit high that makes no structural sense in relation to what is happening. So that's why I want to see the full ADR with the trend, which is uptrend. So this is with the trend. I can be as aggressive as I want on the hold times because it's with the trend. As long as we stay above the Asia high. So why would I take a tiny amount of profit when I can extend it? I can extend it up to ADR high. It'd really be a dick for a tick, but I don't want to do that. I'm happy with my 2R. That is statistically viable. It is statistically stable. And if I can get that, I'm happy. I don't care what happens after. I don't pine for it. I just don't. So yeah. In my silver trade, how will I trail my stop loss? I won't. Stop loss stays. If I was in with more than one, I would maybe clip some off when we get to like 1.5 R. So once we get to maybe somewhere around here, maybe. But for most times, I do not mess around with my stops because they are usually sufficient enough to handle whatever is happening and to follow the structure. Right now, my stop is below the previous low test of the Asia high, and it's exactly where it should be. So me messing with stops as the price is going further does one thing. It cuts off all profit potential. If I think that the trade is no longer valid, let's say we get to 1:30 p.m., we get to COMEX, and I'm thinking, this is not happening. Why would I put it to chance and put something on break even if I can take whatever is there already? Isn't break even zero profit for all that mental capital? And if we're sitting above the highs here, why would I trail the stop rather than take whatever is there? It never makes sense to me. You're effectively letting the market make the decision for you, whereas I like to make the decision for myself. Thank you, Mr. Market. So, if you have 50 ticks available and it gets to a point where the market is not looking that great, maybe they're running out of steam, maybe we're getting to post-MI cut and we still haven't busted through the high, I would absolutely manage the trade at that point. And I would be like, you know what, let's just take it. Why would I put it to break even and trail the stop? It's like, to me, it just doesn't make much sense. But that's me. So, I don't trail. I partial if I'm in with more than one. I will partial, but very, very rarely will you see me actually trailing my stop. It's not that I never do it. Like if I have to step away from the screen and for whatever reason, maybe I'll trail the stop. So it's like more a contingency plan than any sort of a thing that I would confidently do. Other than that, the stops are where they are. And the funny thing to me is that we're supposed to be risk takers, but then traders spend all of their time to avoid the risk. Oh, let me trail my stop because I don't want to lose. And here's a question for you. What's so bad if you lose one trade if it's a controlled loss? Now, if you're going to lose half of your account because you're oversized to your eyeballs, that's another problem. And that's probably the reason why you want to trail your stops. Well, let me protect it. But to me, that's false economy. If you're sized appropriately, getting hit for one trade should not hurt. And you should be okay with that. And you should be like, meh, Evs, next. But no, people are like, they're like watching it with white knuckles and like an ID in their hands just in case they decide to jump off a cliff right after. So, I'm pretty relaxed to my trades. I don't know, I just don't like trading with inappropriate size to the relation of whatever the maximum risk is. And I was trained like that. I've been doing that for many years. And, you just have to get used to the constraints of the prop. and trade within them. I don't know. Mr. G says, D, please share where and how we can find out about call and put wall. Options chain. If you don't want to pay for anything, you go to barchart.com or you Google it, and then you look at where the highest and immediate open interest prices are. But if you don't want to do that, if you go on my Market Stoker's channel, Market Stoker D, there is a video, one before last, about Mentor Q levels. And Mentor Q is what I look at, but I also look at bar chart too. And I look at the Interactive Brokers options chain for some things as well, because that's obviously real-time gamma flows. And yeah, and then I also have some algorithms that I've created which track implied volatility on a day-to-day basis. But, you know, I have to like keep feeding it data, so that's a bit annoying. But yeah, call, put walls, GEX 1, 2, and 3 are the most important things in a gamma exposure. However, you also need to understand what all that means. It's like, is it a negative gamma? Is it a positive gamma? How are you going to run it? Are you expecting the dealers to hedge there? Or are you expecting the dealers to keep buying more? That's what negative gamma and positive gamma environments usually are. It's not quite that simple because that can change. But generally it's, you know, it's how it is. How do I determine my stop loss? If you go back through this stream, I actually talked about it extensively. So I'm not going to be repeating that because other people have heard it already. But I actually talked about how I get to my stops. Web Nomad says, hi D, I see you like trading silver. Like is not really the right word there. Do I think it moves a bit better than gold? At the moment, yes. But me liking this or that, it's not about liking. It's about whether it fits what I'm trying to achieve on a particular stop without drama, whether we have a stronger trend in one or the other on a large time frame. If any of that starts not making sense, like let's say gold right now is stuck in a range, silver is making new highs. Which one do you think will be smoother? Well, obviously silver, because it's pushed away from the accumulation or reaccumulation that they've created. Similarly, copper on a weekly chart last week is closed above the previous high of the reaccumulation and into the weak structure. So which one is going to be easier? The one that had some juice to push above the previous highs. Gold is not doing that. Gold is too big intraday, so 30-minute candles are giving me 180 ticks width, which is insane. I don't want to use more than about 60 ticks trading for anything. 60 tick stops for anything. So if I have to use a 200 tick stop, I would have to go down to 1 micro. Why do I want to trade prop then, if I'm going to trade 1 micro? So that's just my thinking. There's nothing wrong with trading 1 micro. I just feel that gold, for what it's doing right now, which is consolidating, is just not worth my money and my time. Too big, too crazy. Until it sorts itself out, I don't want anything to do with it. So yeah. Is the call wall only on futures or ETFs? So you can convert ETFs to, silver ETF, what would that be? I don't know. I don't really trade ETFs, but on indices, so you obviously have the SPYs, you have QQQs, you have the spot versions, SPX, NDX, all of those have their own levels, and then some people can actually convert those into, and Mentor Q has a conversion tool too. So if you want to use that, that's fine, but for me, if something has outright futures, that's what I'm going to use for a call and put wall, because it's the actual product, rather than a derivative of SPX, which could be also useful, especially on days when everything goes a bit nuts. Some of those levels might be able to provide you with some more clues of what they're actually trying to do. Okay, so gold has just had the gold fix, so that's 10:30. So that should have brought in a little bit more more, slightly more oomph, but it shouldn't really do much. So gold fixing happens for the first time at 10:30. Sometimes you see a reversal, sometimes you see a continuation, but this is a bit of a meh time of day for this purpose. Silver has the London fix at 12, so it's not yet. But yeah, so very good question, PG contract. ETFs, open interest are definitely something you want to look at. And then maybe if you want to go down that route, see how they relate to the futures ones as well. But for me personally, I just do futures. So, you know, for me, silver spot and how they're behaving, couldn't care less, because I know the most producers and users of silver will be using actual futures to hedge their positions. So I want to be where the big boys are. So yeah. Right, so still nothing. We're seeing that consolidation for this time of the day. Still sitting above Asia high, still sitting above IB high. So again, nothing to do but wait. But yeah, so into the next 30-minute period. So now we survived the first TPO. Now we look for the next TPO, or the A loop. So for now we're holding the reference points, and there's nothing to do. So the OODA loop says sit on your hands. So if that changes into the next 17 minutes, then I will have to manage these more aggressively. I will have to maybe cut some of them if they're not moving. But for now, we're just sitting and waiting. And that's the beauty of working off the 30-minute time frame rather than 2 minutes where you're constantly strung out. So yeah. And you know, at some point we will change these streams to start a bit later, to start at the time when I'm finishing my streams now at 11, but just don't ask me when, because I asked, didn't get an answer, so probably next year. I mean, it's too late to change anything now, isn't it? It was supposed to happen, and then we had a whole bunch of new people joining the team, and they've been a bit unresponsive, so, yeah. What happened to NASDAQ? Yeah, Gorillionaire, I think, posted. So China set to limit access to NVIDIA H200 chips as per Financial Juice. So yeah. But again, it's not a massive unwind. They just tagged the HVL, which is gamma flip level. It's not even yesterday's low. And then bounced from it. So, yeah. Again, guys, can you get off the 2-minute time frame? Jesus Christ. Like, let's have a look at NASDAQ. Let's have a look at NASDAQ on the actual time frame that is not freakish. Does this look to you like, oh my God, they smacked NASDAQ? Like, I would have said they smacked NASDAQ if we went below the other day's low, below yesterday's low, and they just continued to smash it. This is just a normal reaction to a bit of news. So if that changes, then it's a breakout. Right? Previous day's low. Very important on NASDAQ. But this is nothing. It's just like somebody heard something and algo got involved and they pulled it right back to where it started. So get off the 2-minute or 30-second chart or whatever you're on to think that this is a big move. Because, you know, on a 2-minute time frame, it looks terrible, doesn't it? But you zoom out and you're like, eh. Yeah, Bruno, right. That's the danger of low time frames, guys. You think that something, like I will never forget the time when we had a newbie junior funded trader. And And he was young as well. It wasn't just like, oh, he's a junior funded trader. But he came through the university or whatever. So he was there. And we worked in a company that was sort of owned by First New York. But it wasn't called First New York. They were just like a franchise of it. So we're sitting there and he was looking at Dow. I don't know why, but he was. So he goes, guys, is this a flash crash? And we were all like, what? What? And he's like, yeah, it's a flash crash, look at it. So he was basically on a 1 minute time frame. And we were going in from the Asia session to the London session. And at that time, YM used to move a bit more. So he just went into a regular trading hours movement. But because he was on a 1 minute, it legit looked exactly like this, right? So to him, this was a flash crash, man. Flash crash. And we were like, get off the 1 minute. So then that was his first lesson of not staring just at the 1 minute time frame and having a reference. Now, like I said, if it starts to bleed below the low, yeah, that would be like, okay, we're going down. But for now, to me, this is just like storm in a teacup, as I like to say. Storm in a teacup. Yeah. D check 100 tick chart. You'll see the God move. Yeah. I was short NQ and got bottom tick just before the fall. Oh, man. Sorry to hear that. Yeah. So you were short, got bottom tick. Okay, so that will be the stop loss placement too tight. So your stop really should have gone over the structure. And again, let's have a look at it. If you were short there. This is what I mean by not allowing the trade to work. So you had a good hypothesis that it's going to go down. And it's fine because this is technically now rotating through the value downwards. Good time of the year to be short. But your stop really should have gone above this high. And quite a bit above that high. Maybe, just maybe, you could have absorbed this wick. But if you had your stop above the swing reference, you would have been safe. And instead of getting ticked out, you would have had nice profits there. So yeah. Lower the size, widen the stop. It's the only thing I can say. You need to give the trade time to develop. Nitpicking on stops, unless you're going to take like tiny little profits, which again I don't like people doing because I think it's so much work for not as much money, because then all of your profits are eroded by the commissions. I don't even notice the commissions. And some people will say, well, on XFA you don't have commissions. Yeah, but in the live you do. So yeah. Our Trades Futures says, what's my thoughts on engineered liquidity? Do you think that's a thing? For example, GC didn't have enough fuel to push highs. So to me, it's not engineering, more liquidity to go higher. Thoughts? Yeah, I would agree with that. I think engineered liquidity is what the dealers do. And, you know, if we didn't have the market making, you would not have tight bid and ask spreads. So everything is engineered liquidity, if you think about it, right? And, you know, to me, it's really obvious if I look at like markets that are purely speculative. The markets that are purely speculative versus the markets where people have to be in. So, for example, soybeans versus NQ. You won't get games that you get in NQ. So I would say that would be more an example of engineered liquidity, where they run through obvious levels and then reclaim them. Why would they be doing that? Well, it's because it's a whole bunch of retail traders trying to speculatively trade that. Now, in something like soybeans or cattle, and even to a degree in copper or anything that you have to be in on because you're either a user or a producer, that doesn't have as many games. So you won't see, like for example, if copper wants to reject VWAP, it will do it in an orderly fashion. It's not going to do it by going way over it all the way to the put wall and then coming back, which is what NQ does a lot. And that's the difference between an actual liquidity, true liquidity, people who have to be in there, versus nonsense liquidity, just trading for the sake of it. But silver, I do agree, is going to go higher, not because of, engineered liquidity, but because we ran through an Asia high, and now we're just seeing the standard statistical consolidation before the London fix. And then after the London fix, we may get the move that we're after. But this is a dead zone to me. It always has been for a lot of the metals. However, sometimes it offers a good opportunity to get in early on the move. And then if it continues, you're in a very, very good spot. If it doesn't continue, it doesn't continue. Nobody cares. And you just take it on the chin and carry on. But this amount of volume above the Asia high, that is usually a continuation. So whenever that happens, I want to make sure that I'm still in. And if it doesn't happen, it doesn't happen. And that's absolutely fine. What is gamma hedging and what indicator do I use to view gamma hedging? You use your own eyes and open interest from the options market. And then plop a line where the open interest is. And then you see how the price action behaves around it. So gamma pinning is if you have a big level, like for example, we have the gamma pinning going on in gold, I would say. I mean, I suppose in silver as well, because we have GEX2 at 59, so let's stick to that. So GEX2, 59, basically where the Asia high is. So I'm just going to rename that since we already have a marker. So what is gamma hedging? Well, since we ran through GEX2 and we're holding above it, they're now pinning the price probably into the London fix for another hour or so at the GEX2 level. So they're not letting it drop down, but they're not letting it go higher either. Now at some point, they will have to buy more in order to continue this move. So when that happens, we could be in a situation of going up to 59.50, which is the next open interest level, where we might see some more gamma hedging and gamma pinning. Because now we're in positive gamma environment. We've gone over the gamma flip, and now every level that you come across, and there's only two in the run up to 60, so there's 59.50 and the 60 is a call wall. And which of the two is stronger? Well, 60 is stronger because there's more open interest there. But day to day and even intraday, you will have different option positioning. Now in silver you actually have daily option expiries, so the 0DTs are not that relevant because it's not like some big event. It's like, oh my god, the 0DTs are expiring. And no, it happens every day in silver. And it's a good thing and a bad thing, but because silver is not super speculative, you usually get another move after my 8 p.m. So for power hour, you usually have yet another move in silver. Nothing like it is during Asia or during COMEX, but it's still juicy enough to sometimes get me like my 2 hours. You can definitely get like 70 to 100 ticks for that final hour. But yeah, so gamma pinning is basically when you reach a level of open interest or you overshoot it, like we did here, and then they're pinning the price to that area, hedging around it. So what happens after is very important. Sometimes it can break down, other times it can continue, sometimes they stop short of the gamma level, and then they start hedging again ahead of it. So that will be, all a possibility. And you just have to watch price. Did we go over it? Are we bleeding back through it? But it's certainly always a dealer interest zone. It's a reaction zone that you should know about. So I don't have time to do the mentor Q platform here, and I don't think it would be fair considering that this is TopstepTV. Maybe I can designate a live stream on my channel, even though I don't like doing live streams because they take it out of me. So I can only do, one every once in a while over there. But yeah, so yeah, just for now, go through, I mean, you probably already saw my mental cue thing, but yeah, maybe we can do a stream on the Market Stalkers channel. One day we can talk about mental cue. Because they have an app now, they're actually phasing out the Discord bot. So you used to be able to do like a Discord thing, Discord little command, and it will spew out stuff, so that's going away. Why don't I use pivot point levels? Pivot points I've only ever used for swing trades. I don't think the daily pivot points matter much unless you're going to use them for targets, because they're middles of the middle. My strategy typically stays away from the middle of the middle. And, crossing over a pivot line is not nearly as relevant to me as it is crossing over Globix VWAP, for example. And every time I did statistical tests on how often the pivot points work, on my products they just don't work as well. Maybe they work well on equities, but pivot points get run over. They are not that relevant. And to me, they are not comprised of volume. They're just comprised of a pure average. And I already have the averages in the form of my average daily ranges, which are almost like volatility bands on the day. But, so yeah, to me, they are already pivot points. I just look for extremes. So this is a breakout. This one was an extreme. I'm getting involved late because I wasn't in on the Asia low because I wasn't awake, or I was trying to get ready and feeding my cavalier his meds. But yeah, so yeah, I would have gotten involved somewhere after the Asia low got a reversal at the ADR. So to me, pivot points serve no purpose. When I was a swing trader, just to add to nothing else, I was using monthly pivots as a target quite regularly, and that worked well. But intraday, I think we have some more important order flow references that are much stronger statistically than pivot points. So again, nothing wrong if you're using them. I'm just not a fan. Not my jam. I look for things that actually have like a volume component in them or profile component in them. And that becomes more relevant to me because I know, or option levels as well. They have option open interest at particular strikes. So that's all like volume based. Whereas pivot points are like, nah, who cares? At least that's how I've always seen them, because I look at them intraday and I just don't find them valuable personally. Again, nothing wrong if you do, If you find them helpful, keep using them, no problem at all. I just don't. It's just how it is. What happened in NASDAQ? We had some news that NVIDIA is going to restrict one of their chips to China. So it had a reaction. But again, like I said, get off the 1 minute chart, because on a 30-minute, it's a storm in a teacup. Storm in a teacup. It didn't break any levels. Just one piece of news that an algo picked up, and then they bounce right back. So until it breaks the previous day's low, this is not a breakout of anything. This is just an overreaction. But get off the 1 minute chart, or 30-second chart, or 100-tick chart, whatever tiny time frame you're using. Put a 30-minute time frame on the other side, and you will see how irrelevant this move is for now. Okay. All right, guys, I think that's all we have for today. I'm going to stay in this micro silver trade. I'm going to stay in the copper trade as well, because as we're coming to the next 30-minute TPO, we're still above Asia high. We're still above initial balance high. There's literally nothing for me to do but wait. So I'm going to wait for the London fix on silver at midday. and then we're going to see if we can continue on this move higher. If not, I'm going to manage it a little bit better as we get closer to the London fix. But for now, it's just a consolidation before LME for copper and COMEX later on for silver. So thank you for joining me today. I will see you tomorrow, and tomorrow I've got a busier day because I'm going to be on, I think I'm going to be on fast markets and on group coaching tomorrow. I'm going to have to recheck the schedule. But yeah, so you will see me a little bit more on the main broadcasts, and we can maybe do some energy trades as well, maybe some RBOB, if it happens. Zena says, if a 350 tick move in a 15 seconds isn't a flash crash, I don't know what is. Okay, let's put that just before I end the video. What is the range that we have intraday on NQ? Do you even know? I know, it's 1,100 ticks. So a flash crash of 350 ticks is not a flash crash at all. It's barely a third of the range. That's not a flash crash. Flash crash is when the market goes 3 times over the ADR in the 10-second period that you're talking about. It's not a flash crash, mate. Sorry. Take a look at flash crash in Dow Jones that happened. Take a look at how that looked and what it did to the price. It was a cascade that carried on. All in seconds. All in seconds. That's a flash crash. This, again, get off the 1 minute time frame and put it into context. A third of the day's range and then a ping back. Nowhere near a flash crash. I'm so sorry. That's all I have for you today. I'm Marcus Tokadi. This was the Eurotrade on TopstepTV. And I will see you again tomorrow. Have a great rest of your day.